Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man, the head honcho, AJ Brown. Good morning, AJ. How are you doing?
I'm awesome, man. I've been spending a week at the beach, not paying attention to much, but my trading. It's a good week.
Yeah, not only is it a good week, it's a good Friday. I feel like today I woke up, I saw the news. There's no rockets. There's green across the screen. Markets are hitting new
New
highs.
highs.
We're getting some feedback that the trade negotiations might be finalized. We might be
China,
getting some
Europe.
details on that. So uh our previous Fridays have been a little bit more negative. We did get some inflation news this morning. It seems to be, second fiddle to, the economy just strumming along. What are your thoughts? Where do you want to begin?
Risk on. That's the phrase of the week, right? Risk on. People have been shedding gold, shedding the VIX, shedding their options, buying, buying, buying. I do have a couple of warnings, but we'll get to those.
Yeah, and so in the previous episodes of the show, we've discussed wanting a pullback to get to new highs, and it seems as if we never really got a good pullback, and so the confidence in these highs, I don't know, is not as powerful as you would like it to be from a
Well,
technical perspective.
yeah, absolutely. In fact, I'm pulling up a couple of things here. So, I love my retracement analysis. We call that my rainbow analysis. And I'm going to pull that up. Here's what I've got some concerns about. Every time we pull back, we haven't been pulling back enough, right? We want to pull back into this magenta zone. That was the third pullback. Here's the fourth pullback. Now, I've actually been working. What I want to do is more complicated than some of the folks out there who have programmed indicators with me in the past have done. But if you can imagine, if you can turn your head at an angle, here is that we have an ascending, converging, or consolidating channel, right? It's not just a horizontal uptrend. It's actually consolidating. And that's what you get when you don't have good contractions. Yes, we've been having these great expansions, which means the moves that are in the same direction as the trend. We're already locked in now with this current little breakout up on all the good news this week. We already have another one that's already considered, ideal uptrend. But because you don't have those pullbacks, we're actually consolidating. And what I want to be able to do, and this is for those folks out there who have some smarts and indicator program, maybe this is a challenge for you, is I'd love for you to somehow remove, created an indicator for me for my charts where you remove the linear regression, the best fit trend line from all the prices. And that way we can see it on horizontal and be able to see how our channel is actually doing when you take out any sort of bias to it. Because I can see it with my eyes, but a lot of folks I've been asking, even experienced technicians about this, and they have to turn their heads, and then they're like, "Oh, I see what you're seeing, AJ." So that's where we're at, a sip.
And I suppose this, this is a good premium selling market now because some of those longer term positions that maybe you've had in your portfolio are looking pretty good, and you can start to maybe protect them a little bit in case we have a pullback. But
Sure.
uh, but what is gonna? It seems as if nothing's gonna bring this market back
I
other
mean,
than
that's what it seems, right? That's what
uh,
it seems. But the scoop is when you don't have, so I talked about the nerdy stuff, right? I talked about how range contraction needs to be as strong as range expansion and all that good stuff. But what does that actually mean? It means that the market is a constant trading of money, right? It's a lot of people, especially when things are bad, they'll say, "Oh, all this money was lost in the market." The markets don't lose money, right? All the markets are is a place where things trade hands. And so the range contraction is actually a way for the big money investors, the fund managers, right? Whether it be pension funds or mutual funds or hedge funds, these type of folks, right, when there's a pullback, they can then reload and start buying again. When there's no pullback, right, and that's kind of a sign of the times. The market is reacting a lot to whatever is in the news headlines, and there's been, you know, a lot of wait and see and then positive news, wait and see. And I almost feel like it's been spin doctored for that purpose. But when you've got that, and you don't have those pullbacks, what I see the big, and listen closely, what I see the big market movers doing is getting excited for some either basic or actually quite massive profit taking, right? And so I get it, but I get that the markets seem like there's no bottom, but when you see this ascending consolidation, what I see is big money investors. We're talking Wall Street pension funds, Wall Street mutual funds. They're just looking for the perfect opportunity, right, to take all their profits out of the market, right? And without, I get it. We're pushing as little retail guys. We get excited. We get, you know, spun up, and we start buying, and we start, buying crypto. We start selling our gold reserves. We don't worry about hedging with options. This is just inflating the market for the market movers to take some profits. I wouldn't be surprised if during the summer doldrums, which is starting next week, and or maybe in September, we see a lot of profit taking.
Yeah, and I mean, it seems as if the news headlines can be a little bit skewed because all-time highs is we really just kind of made back all of the big push that we had, pretty much post February when all the tariff stuff came out. So we're kind of where we started the year, and maybe hopefully we start to move more so based off of the economics rather than Trump's social social bumps and things like that. And so when
But
you look
what
at
the question is what new besides recovering from all of Trump's, mass mastications, for lack of a better word, besides recovering from that, what new is on the horizon? I'm not sure. I mean, of course, AI is out there and things like that, but the fundamentals, even today's employment report, Sib, or not employment report, today's personal consumption expenditures report, it wasn't the most exciting, right? Yeah, sure. It says that inflation is moderating. Actually, not core inflation, right? Core inflation is higher than expected. But overall, it's saying that prices are moderating. But it's also saying that incomes, like, look at this number right here. It's saying that incomes are moderating even faster. That means your paycheck is going to get smaller, and prices, they may be coming down, not the prices of stuff that's core, but you may see some prices like on some food items or some specific things coming down, but your paycheck's going to take a hit even faster. So you know fundamentals are missing, right? Yeah, the news headlines, deals with China, trade deals with Europe. Europe now needs to buy a whole bunch more missiles, right? Because they need to protect themselves. So trade deals coming up with Europe, trade deals on the brink with China. Great. That was, there were trade deals before everything started with the tariffs. So great, we're back to square one. But how do we move forward? So all to say, yes, premium selling, even though people are thinking, oh, we got to go directional in the up market. I'm telling you, play the medium to long term game, premium selling with hedges.
And this inflation topic was pretty popular this week in regards to Powell being on Capitol Hill in front of the legislature, and inflation kept coming up, and he was pretty, like set in his demeanor on inflation, in that he's not, he's not so quick to want to cut rates, because it seems as if his perspective was the tariff stuff hasn't trickled in yet. We may start to see it now, and it may have an impact on inflation. So I don't think we should cut yet. However, some of the other reserve heads are starting to lean more towards a cut. Did you catch any of that this week?
Oh, absolutely. I was totally tuned into that. And don't forget, Trump over at the NATO summit, instead of talking about NATO topics, all he wanted to talk about was how low an IQ Federal Reserve chief that he actually put in place during his first term, how low an IQ he has. And that's just because he's not lowering interest rates, right? Trump wants him to lower interest rates. He doesn't want to lower interest rates. It doesn't make sense according to his data. So, yeah, I feel like there's this game of give and take happening at the Fed. So, like, for instance, the Federal Reserve gave a whole bunch of gimmies to banks this week, right? The banks have been wanting to be able to, not have as much scrutiny, and the Federal Reserve went ahead and capitulated on that. And then you've got these Fed, after Jerome Powell, gave his message, you had some individual Fed bank managers, talking about lowering rates. I think they're playing kind of defense. The Fed is not a political body, right? The Fed is completely separate. And, Donald Trump is coming and hammering the Fed, basically bringing what they're doing into what Trump likes to do. Instead of having it done behind the scenes, he likes to have the public scrutinize it, and Trump likes to basically spin doctor everything. So now the Fed has to play defense, not only in monetary policy, but also, against Trump. Trump's talking about doing something unprecedented, which he does all the time. He doesn't follow, the playbook of norms, and that would be to, assign a Fed president early. That doesn't mean that Jerome Powell, is no longer the Fed president. Jerome Powell's term isn't up until next May, and he has shown no signs of leaving early, right? But if Trump goes even in the next month or two, which is what rumors are, if he says this is going to be our new Fed president, and the Fed president's coming up for next spring, right? And so that's even before midterms. So as far as getting him into position, that's probably a gimme with the current way that the government is structured. So if he assigns somebody now in the summer, it's almost like, a lame duck session for the Fed. It kind of takes some of the teeth away from Jerome Powell, and this person could be like a backseat driver. So Trump could actually basically put in place somebody that he will do what he says. I actually see something interesting that I think could happen. And I could see, so you're seeing here investor expectation of a Fed rate drop. And again, it's gone a little bit higher for July, but for the most part, investors don't expect any rate drops in July. They expect one in September. In fact, now they also expect one in October. In fact, just this week, we are starting to see one maybe in December. So last week we were talking about no more than a half point rate drop in 2025. Now investors are starting to lean towards 3/4 of a point rate drop in 2025. But if this inflation starts to, creep up because of tariffs or because of whatever reason, I actually I actually think the Fed might play a game with its two active tools. Again, they started to do some quantitative tightening again. Quantitative tightening is a way to combat inflation. So, what if they lowered short term rates, so that the president could get his kudos, I have power over the Fed, blah, 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 blah. But at the same time, what if they continue or even ramp up quantitative tightening, which would mean that the 10-year treasury bond would go up as a oversupply of bonds causes yields to go up, and then the mortgage rates would then possibly go up, but short-term rates would be down. I mean, that might be a win-win for everybody, because then it would also make that yield spread between the 10-year and the 3-month increase, which has gotten a couple of economists upset. So you might create this win-win situation by using those two tools against each other. I don't know. If I was the Fed, I might do that just to get the heat off of me, right? Because man, this guy can create some heat in the, you know, public sentiment.
And it seems as with the markets hitting highs, the angst to the lower rates diminishes a little bit, because it's like, look, things must obviously be going well. Markets are hitting all-time highs. We don't need to do this as quickly as we might have if we're still down, I don't know, the 15%. Like, that might have been more of those, okay, we're get a lower rate so that we can kind of get, people
Get the ball rolling.
to stop people from freaking out so much. But the freak out is made by our own doing, not by what's going on in the economy. But for those two, so like if we did get a cut in July, that would be like a shock to the market, at least in terms of some things would move outside of the doldrums, because we have been on hold for so long. And you're saying that a half point for the year is on the table?
Well, no, I think it has been a half point since probably the last few months. I was looking through my notes at when the last time we actually said it might be a 3/4 point, and it was all the way back in like February, March that we were saying that. Since then, it's been a half point, but as of this week, it's back up to 3/4 point. It's back up to 0.75, or a 3/4 point rate drops. We'll see.
And are we like one of the later countries to not cut rates? Because I keep seeing that other countries around the world have begun to cut, and we're kind of late to the party.
Yeah, but they were way higher, right? So they raised their interest rates much higher. Their interest rate. So, it's kind of apples to oranges comparison there. Our rates are some of the lowest in the world. They're not as low as Donald Trump would like them to be. But I think that's less of what really works and more of what would make the American public happy about stuff Donald Trump is doing. So that's why I almost think, because this whole quantitative easing, quantitative tightening tool is in the background and not many people hear about it unless it becomes a news headline, I almost feel like one of the Fed's solutions could be to drop short term rates but increase quantitative tightening. We'll see if I'm right. I'm not as smart as those guys, but I'm all about following in footsteps. But, the combination of seeing the market consolidate, and I hope you guys can see what I've been showing you here. We like to draw in our drawings, we like to draw parallel lines, but in reality, if you look really closely, this ascending we call this an ascending consolidating pattern, right? This thing is more like one of these things. And, I'm watching this carefully because this usually, again, it's these pullbacks that are just not doing it for me, and they're not doing it for some of the market movers. I wouldn't be surprised again if once we consolidate, um, we see that profit taking. I think those market movers are just dying to take some of that money off the table. And every time they see a news headline come in and retail investors pile their money in, they're just like, oh, because they're playing the medium to long term game. They're getting so excited because the market keeps booing higher. And they're like, you know what? I'm just going to wait out, and at the perfect time I'm going to sell, and when they sell, the market's going to collapse. So I'm making sure that my program participants are hedged for that.
For sure. And it seems as if that 6,000 mark is a level of great interest over time that we'll continue to keep an eye on. I do have two more questions before we
Yeah.
dig into some more specific examples. One, and you brought it up, was going to be the VIX.
Mhm.
The correlation with the VIX continuing to drop and the market hitting new highs looks like it's spot on. What are you seeing from the VIX? Are you seeing any opportunities to put that protective, or pop, whatever cool name we're gonna come up with for that trade?
Yeah, our VIX hedging trade. That's not a cool name, but that's what
No.
it is. We need to think of something cool. But yes, the VIX hedging trade. In fact, I don't know if it's going to be today. Let me change gears here. I'm gonna leave it with this 3 and 5 day EMA crossing. Um, when I see a bottom formed, absolutely the VIX hedging trade, this is the time. So everybody has to remember, and you maybe haven't heard me say it recently, but we put our trades on in times of peace, not in times of war. That was something my mentor said to me often. And I'm saying to you, that means you don't put on your trades, after the proverbial poop has hit the fan. You put your trades on in advance when everything is calm, and then you're poised to profit when things don't go well. And same when you're taking trades off. You take your trades off in times of peace, not in times of war. So we're in a time of peace right now with the VIX trade. Perfect timing to put it back on.
Yeah, and the piece was weird. I don't know if you watched it this week, but it was like they agreed to a ceasefire. They still
Mm.
fired rockets at each other, and then the
Trump dropped an
storyline.
F bomb.
Trump dropped an F bomb, and then the questioning was, well, did you obliterate it or didn't you obliterate it? Where are you getting your intel from? Does it even matter? Da, da, da. Why aren't you talking about the bombers? They did a great job. Just pure entertainment. All right. So the second
Yeah.
question that I had for you was a tweet that came up that I was, was curious about your input. Was this rise in the overall market being led by a few names more so than the overall market? And so this one was that the 10 largest companies as a share, what is it? 10 companies are responsible for 30% of all earnings. And specifically this week, it was a lot of the software stuff. So I know that NVIDIA hit new highs. I know that Microsoft hit new highs, which are significant holdings in these indexes leading to the highs. Is this something that you keep an eye on, that you're seeing the divergence and maybe could have an impact? Because remember when the DeepSeek came out and NVIDIA dropped like 7%? Like that could happen again, right?
Yeah. Yes, this is one of the things I teach people to look at, to not look at just the big three, the Dow, the Nasdaq, and the S&P 500, but also I like to look at the sub indexes like the S&P 100. That's the 100 best stocks out there. So that would encompass those big players, then the mid caps, and I like to look at the small caps two different ways. So you'll notice that the 100 best stocks out there is up at a higher clip than the mid caps and the small caps. Don't get me wrong, the mid caps and the small caps are holding their own, but these large caps, 3.26%, compared to the average, that's just telling me that exactly what you said. We also, on this show, we've pulled up and compared the SPX EW, right? That's the equal weighting, or I don't even remember the ticker off the top of my head. But it's the S&P 500 where you give each one of those 500 stocks an equal weighting versus the SPX, which is, weighted towards those biggest companies. And when you overlay those, we can often find ourselves with a, divergence. And that's always, when you have just a few players moving the market, well, it's almost like that whole discussion on diversification, right? You're no longer diversified. You're basically putting all your eggs in the basket of like these top 10 companies. And if those top 10 companies falter, then you falter.
Yeah, and we as consumers and as retail, we're those when those headlines hit of the S&P and the Dow, they are impactful, like new highs, certain percent, right? The emotion is there, even though the reality might not be as refined as you just
Risk
explained with
on.
the
Everybody's
weighting.
talking about risk on, and they're like I hear the noisemakers, and it's like it's as if it's 4th of July a week early.
Yeah, wild. Okay, great. So we've got some more goodies for the rest of the show. First and foremost, for anybody tuning in for the first time, if you haven't checked out our quick links page, this is where AJ puts all of his goodies, links to all the socials. You'll see an indicator. I think you may have seen it on the charts. Two little arrows, a red arrow and I believe a green or blue arrow that you can access for yourself. So if you head on over to the links page, hit that free indicator suite, you can grab that and a few other goodies. We've got AJ's free daily workshop. So we'll be going over some of these premium selling strategies. If that's new to you and if that's something you want to learn a little bit more, that's a great spot. We've got more about Trading Trainer, the program in general, and some one-on-one coaching if that's something that you're interested in getting a little bit more hands-on experience. So we're going to go ahead and throw that link in the chat for everybody. We are streaming live. We've got AJ's pick of the week. We've got some speed round names. And if you, the lovely folks out in the inner world, have something that you want AJ to run through, feel free to throw it in the chat and we'll get to it if we have some time. Otherwise, we're going to take a short break. We'll be back to go over our pick of the week. We'll review last week's pick of the week, which I'm hearing is crushing it, and we'll run through the speed round. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Let's review our last 2 picks of the week. And
Wait. I pulled it up while you were doing the quick links. Take a look at my chart just really quick. Sorry, guys, this is a live show, so I have to pull this up. So the magenta line, that's the S&P 500. And then this line that's green and red is the S&P 500 equal weighting, right? And so you can see exactly what Sip was talking about. The S&P 500, which is weighted or it's leveraged towards those bigger companies, is definitely diverging from the equal weighted. So those big companies are starting to outperform the market, and again, that's kind of a a cautionary red flag, or can I say yellow flag?
Yeah, and definitely leading to the new highs today on
Yes.
a lovely summer Friday. But the name that we reviewed last week that a lot of your folks were looking at
2
potential.
weeks in a row. This will be the 3rd week.
Yeah, and it's retailer
Mhm.
Bath and Body Works, ticker symbol BBWI. Did you get some folks that got into it and are giving some good
Yes.
feedback?
Yes. Well, not only did we get into it on our signal, so let me pull up our signal here. So I'm switching our indicator. So we've got this signal and we got follow through on June 17th. Well, now this is doing exactly what we said it would do. We're at the point where we're past, the halfway mark in our channel. So now, if you sell your premium and buy your protection at any point now, you've created enough price difference from when you legged into the initial covering position and when you collar it, when you sell premium buy protection, that this is pretty much going to be close to a risk-free trade moving forward. And by collaring it, you can hands off. It becomes a self-adjusting trade. You don't have to stay up at night worrying how the market's going to open. It'll take care of itself. Now, that's where we are as of today. You can allow it, and what a lot of our program participants do is allow this to continue to appreciate, and once it gives us a signal like it did over here or it does over here, that's when you can go ahead and put on your collar. And the more space you create from where you actually purchase this initial covering position and when you actually put on the collar, is the more reward you're going to get, and even better, the less risk, to the point where you may actually have zero risk at all by putting this trade on. So I love this. I just wanted to feature it because we called this out 3 weeks ago, and this is performing exactly like we said it would.
Yeah, and that indicator has very solid follow through, and it seemed
Yeah.
to have really called the bottom on this. But also, when you had the S&P up, it definitely kind of caught that little pop to the downside,
It
and
totally did.
good opportunity to put that on with some follow through, with some room to the upside. I mean, we're talking about $6 to the upside that has
Still,
is on the table. Yeah,
let me
awesome.
tell you guys out there, we have been doing deep dives this week in my program regarding, watch list and watch list maintenance. And I think, put Bath and Body Works on your watch list and revisit this often for possible, positions if you're not already on it. And if you missed the opportunity, even though Sip and I have been ringing the alarm bells on this for 3 weeks, if you missed this trade, I hope you go back and do a paper trade on that day. This was on June 17th. And then follow this. I want you, especially you folks who aren't, everyday premium selling traders like I am. I want you to see that this, plays out the way that we said it would play out, because these are the type of positions I fill my portfolio with. And it's just, some of the easiest trading you can do.
Yeah, and if you missed this one, we've got some potential other names to run through, and that's kind of the beauty of the show. So, if you want to find more winners, then you need to hit that subscribe button. So head on over to the YouTube page right now, hit the subscribe button, because we've got some other good names that we're looking at. And so your pick of the week this week, AJ, is a new name for me, and I don't know if we've covered it on the show, but this is Capricor Therapeutics, ticker symbol CAPR. And this is a biotech company, working with some sort of cell therapeutical technology. That's about all I got.
They're working specifically on muscular dystrophy, which is, a really debilitating disease. I lost a good friend from high school to MD. Okay, here's the scoop. This is at a great price. It's got great patterns. Um, you could, if you're into candlesticks, we've got some good candlestick patterns showing up that can give you a kind of a pre-warning, if not a signal to tops and bottoms, if you don't want to just use, technical indicators. So we got some good signals on a bottom here when this was down around $8.5. We've been going up just like a textbook here. Here's the one scoop on Capricorn Therapeutics. Lacking a little bit of liquidity in the options chain, but there's still a back month option. This is not one that I expect. This is a little bit more, and it's out of my usual. This is a little bit more of a speculative play. So I'm not worried about buying a back month option that's 8 months or more out. So they have a January leap in 2026. If you want to buy the $2.50 Capricorn, call that expires in January, I can see doing that. But the bid ask spreads are a little bit on the larger side, not large enough for me to worry about, but getting your limit orders filled. You may have to tweak from the mark price to a little higher or a little lower, depending on whether you're buying or selling premium. But the numbers still work, and there's such a big swing between about $8.50, and even if I only go as high as like $12 or $13, this is going to wind up being a great trade. Again, a little bit more on the speculative side. So gonna not expect it to go, 5, 6, 7, 8 months, maybe go 3 months, sell 2 or 3 premiums, and I'll be happy on that. But keep this one in your, sights, everybody.
Yeah, definitely a little bit more favorable on the pricing there at $11 right now. So
And
we love to see those.
the option chain, I'm just going to pull up our little handy dandy option lookup tool that anybody can get access to. You just have to go to that quick links page and get the free indicators. You get this as well. CPRI, no, CAPR, right?
CAPR, yeah.
Yeah. CAPR. And what I wanted to show you here is, if we look at the September, you'll notice that the options are trading every $2.50. That's usually something that I shy away from because I like it when it's every dollar. But check this out. If I fool around with either the 750 or the 10, and then up here I do the 1250, this creates a nice range for me that the stock can go through, that $5 range, and that's perfect for what I'm trying to get accomplished here. So even though it's a bigger spread between those strike prices, I'm okay with it based on how the pattern is playing out.
We've had some examples like that in the past. So thank you for explaining some of those option pricing.
I'm nerding out on you.
Brackets, because that can get a little bit more confusing for some of the newer options traders. So that's your pick of the week. Capricorn Therapeutics, ticker symbol CAPR. Okay, we've got 3 other names from some of our viewers all across the country, and we got a nice little slate here. So let's start off in my neck of the woods, the West Coast. Ken out of Santa Rosa, California wants to know, do we have anything going on in Sunrun, ticker symbol RUN, a name that we've covered on the show a few times?
Yeah, Sunrun. I actually had the Sunrun guys out at my house trying to pitch me their solar panels solution. So Sunrun is a big name in the US. They do solar. Listen, so this bill is going through legislation right now. I don't know if you guys are following. There's been some big headlines this week. For instance, one of the primary ways that they wanted to save money because they're spending money in fact, Rand Paul will tell you they're spending too much money on things. They're reducing, incoming revenue to the U.S. government. So one of the places that they want to save money is by cutting down Medicaid. And in the Senate bill, or the Senate hearings, they basically said you can't do that without a majority vote. So that means they need 66 yes votes on this Congress. So there's some things going on with this budget bill. The budget bill also includes a reduced incentive for going solar. They're going to take away, for almost a decade now, the government has been funding individuals to go solar. And by the way, a little hint for you guys out there that still want to go solar even after the incentives dry up, consider making a home business and forming an LLC. The incentives are still going to be in the books for businesses, right? And plus there's actually more incentives. So just a side note there.
That's a great tip, AJ.
Yeah. Yeah. Well, I looked at it both ways. I looked at it as doing it an individual and trying to rush it and take advantage of these before they would dwindle away, or just doing it as a business where you could actually even depreciate the whole purchase in the first year, and you break even faster. So if you take your favorite hobby that you've been thinking about your whole life and form a side hustle, go get an LLC. And now you can start purchasing things for your home as a business, especially if you run your business out of your home, right?
Because you need something to power all those screens and all
It's
those
true.
AI programs.
It's true. I have to offset my power bill because of my screen usage. You're absolutely right. But with that said, Sunrun will take a hit if, and part of that whole solar thing was Elon Musk's EV car incentive, which is, behind the scenes, a lot of people have been saying that the reason that Elon Musk was so publicly mad at Trump and vice versa had a lot to do with this new budget bill taking away the incentive for EV cars, which would really kick Tesla in the teeth when it's already down. So all of that is bundled together. So we have to watch this fiscal thing. And I think that investors who are trading in Sunrun, you can see these drops and then these pops. It's like, I think they're responding to whether or not, what the latest tea leaves are saying about this budget bill. With that said, I'm a little bit leery because there is that open-ended question. I see what you're thinking here. You're thinking Sunrun is at its lowest, and maybe this is the time to buy. My answer is I think Sunrun could get lower depending on how things play out for solar in the medium to, the short to medium term. I don't think, by the way, solar is dead. I think solar might be dead for the next, few years. But as we've seen with like Biden's laws, like the CHIPS Act and all that stuff, laws can be overturned as quickly as they can be made. So if there might be a budget this year, in 2 years, 4 years, that budget can return and we could then, re-energize on EVs and solar. But as of right now, I would tell you that I don't think Sunrun is at its bottom. I don't think this is the opportunity for us to start buying. I think there's easier and more less effort trades that we can be doing. Let's leave Sunrun alone until we see how this budget plan plays out.
Yeah, and Elon was just tweeting about something similar to this morning. He tweeted this chart here that is basically electricity generation, China versus the United States, and I mean they're like 3x us over like 15 years or something. So not sure if solar is the solution, but it's definitely a statistic that one of the most influential people in the world wanted the world to be aware of. And so that's what I think, when I hear solar and generating energy and things like that. So Ken, some names we like better than others. This one sounds like is one we're gonna put on the back burner. But maybe our next name, Styles. Styles, what's happening, Styles, out of Lincoln, Nebraska, wants to know, with the tariffs winding down, is there a play in Nike? Ticker symbol NKE, which I believe handles most of their manufacturing in Vietnam, so they weren't as affected as we may have anticipated. What
Yeah.
do you see in Nike here?
Well, my question for you is, did you take advantage of that earnings play? Because Nike reported yesterday pretty good numbers, and you can see they're up $10. Almost up, gosh, 15% or more today. And you can see that it wasn't just here. Let's pull up a intraday on Nike. You can see that that's not just fleeting, right? It wasn't just amateur hour trading. We're continuing to go up today. That's a little bit too zoomed in. Let's see if I can get us out. I'm not going to worry. Oh, I see. I'm on the wrong drawing tool. Here we go. There we go. There. And maybe here. There we go. Yeah. The people are happy with how Nike has performed. So that's the first question I have for you, because I don't have much information on what you're up to there, Styles. But yeah, I think I wouldn't go in on buying Nike right now. Yes, they did well, but again, I come back to my adage. We buy stocks in times of peace, not in times of war. And I'm not talking about literal war or literal peace. I'm talking about, if you chase this with some buying right now, you've basically missed the boat, right? The buying happened pre-session. The buying happened, already this morning. These are people who are too late to the game. And I would tell you, if you want to do some buying of Nike, this is not this is a time of war in this stock. It's already gone up. You'd be more of a follower than a leader on this. So here's what I think you should do, Styles. I think you should first of all go and get our indicators, and then I would load up the MACD indicator, and I would actually rejigger it. I would make sure it's what we call the fast MACD. So make sure you've got a 6, a 19, and a 3. And do me another favor, where it says price, by default, this is on close. I want you to change it to volume weighted average price, VWAP, and run that indicator on top of your chart. And what we're looking for is a magenta arrow, which basically means that all of this excitement of earnings is petering out. And that's when I want you to actually think about buying some put options against Nike, because I think that this is fleeting. That people are just excited about what was reported today. But once that excitement wears off, this will start coming back down. And I want you to be poised when you get that signal that a top has been found to make money on the downside. And then on the downside, you now have what's necessary to be selling what's called put premium. So as soon as it bottoms, and I would expect that it would probably bottom around $60 again, maybe a little higher, you sell your put premium, you buy your protective calls, and you turn this into an income generating position. So don't go long. You're already missed the boat. Wait for the next opportunity to go short and turn it into an income generating position.
As we're sitting here talking about Nike, it has me thinking about Reebok. I don't know if I'm sure you're familiar with Reebok, but Shaquille O'Neal just rebought Reebok in the United States, and they're relaunching shoes and stuff to compete with Nike. And they have a pretty cool little series on Netflix if anyone's interested in learning more about the shoe industry and the nuances behind the scenes, and getting stars to wear your shoes and contracts and things like that. Very interesting stuff. Not that it'll affect
What was that about Shaq? Shaq purchased the
Yeah, he
company?
purchased Reebok USA because what was it? Adidas bought Reebok and basically shelved it, and he was like one of their most famous spokespeople,
Yeah.
and he came out as the president, and they brought Netflix in, and they're like, "Hey, follow us as we relaunch this brand in the United States." Not sure it'll affect Nike much, but it is a
No.
player in the game, and it was just interesting to see the nuances of the shoe game. Like, you know,
I mean, I have sworn by my Reeboks, but that's just because Reebok became a sponsor of CrossFit and the Spartan race back in the day, and I was way into those about 5 to 10 years ago. So I've been wearing Reeboks since then. I'm not in I didn't know any about of that news. So that's kind of some cool it's on
yeah, it's on
Netflix.
Netflix. It's very interesting, and I don't know if you know who Allen Iverson is, but Shaq became the president, Allen Iverson became the vice president, and they're like two iconic basketball players who have very famous Nike shoes. And it'd be interesting to see if they could ever get back to the prominence of, I think the 90s, maybe like the late 90s. That's, I've always been a Nike guy or a Reebok guy too. So that's kind of what sparked my interest while we were talking about Nike and tennis shoes and stuff like that.
Yeah.
So
I have one of my best friends who graduated from mechanical engineering with me, went off because he was always way more creative than engineering mind, and he wound up becoming the head designer for Vans. And he recently, like when I say recently, like in the last 5 years, gave up that role. He did a couple of like offshoots from Vans, and he did some like fully dissolvable shoes for the environment, things like that. But I've always been, and he and I are the same shoe size. So whenever I would visit him, he'd open up his closet and he'd have all the prototypes of Van shoes. So he'd let me have a pair or two back in the day. So I always made sure I stayed friends with Tom. But the scoop is, shoes are, I think Nike's got like what, like 80 or 90% of the market of shoes.
yeah, definitely. I don't know, 80, 70-ish, maybe I would call it. I don't know. That's a good
Yeah.
stat for us to look
It's
into.
a good number, but all these like boutique shoe companies, I've started wearing these OC things that are really nice, but that's just 'cause I don't want to tie my shoes and they have rubber bands, but whatever. Anyway, maybe we should move
Yeah.
on.
All right. Well, our third and final name in the speed round, Gary out of Fort Lauderdale, Florida. And now we're getting into
Ah,
some tech. Super Microcomputer, ticker symbol SMCI. Is this the company that buys all the Bitcoin?
I think so. You might have to look that
Yeah,
up for
I'll
me
look
while
that
I'm
up.
doing my technical analysis. Okay, I see what's going on here. We've been talking about this. This is a textbook consolidation pattern, right? This is where the investors don't know whether to be buying or selling, and you keep them in that state of not knowing, and the longer you keep them in that state of not knowing, the more that any little tidbit of information, usually a tidbit of information that they would be like blow off, becomes, you know, enlarged like a snowball, and they start taking action on that. And so this is a perfect setup. And I'm guessing because I've talked with you before, uh, Gary. Sorry, I didn't mean to say it like that. I've talked with you before, so I almost feel like you probably did. You put a straddle or strangle on this? Because if you did, here's the scoop. So sometimes when you get these breakouts, and I can see that we've had 3 days of breakouts, sometimes you get these breakouts and they're on less than stellar news, but because you've been sitting pretty for so long, not knowing what to do, all of a sudden, like lemmings to the sea, somebody acts on this little tidbit of news and everybody goes over the cliff. But then 3 days later, they realize what they've done and that it wasn't actually market moving news or stock moving news. And so they start taking profits. And a lot of times they overcorrect, right? So here's the scoop for you. When you're in a straddle or strangle, and again, God, you do trades in times of peace, not in times of war. So if you think about it, a straddle and strangle is where you buy a call option and you buy a put option at the same time. And when a straddle or strangle starts going in one direction or the other, the knee-jerk reaction is, let's sell the opposite position because that's only weighing on us. But here's the secret about options. The secret is when one of these options goes in the money. So in this case, when the call option goes in the money, the put option goes out of the money. And an out of the money option actually loses its value less and less, right? In other words, that would be if I had a straddle or strangle in place on this, when it started to go in the one direction, getting rid of the opposite trade would actually be trying to do a trade in time of war, right? It would be like being late to the game. So the answer is you leave that put option in place because it's only going to lose so much value. And now you focus on the call option and you wait for the call option to top out. And so it's already seeming like, Gary, that this call option is topping out. So what you do is when you do feel confident that a top has been found, you liquidate the call option. And now you're left with that put option. And if you get that bounce back either to parity or even lower, that put option kicks in. So sell your positions when they're at their most, not when they're losing value, right? Losing value means that you're trying to sell it in times of war, meaning you're trying to, catch up with things. That never works. You always want to be ahead of the game. So leave your put in place, look and time the selling of the call, and now focus on, as the stock starts to go back down, focus on when you're going to sell that put. That's how you exit or leg out of a straddle correctly. Don't sell your position thinking that getting rid of that put is going to get rid of a weight on the call trade. That doesn't work that way. The put actually is less weight than you think it is. Leave it in place because it could kick in later.
Yeah, and this is not the Bitcoin company. That's another microchip. These guys are making tech stacks for computers, GPUs, servers, processors, things like that. 29 billion market cap. So not a small company.
Well, I got to just tell you, Gary, if you did, like I think you did, if you did catch that straddle, or it looks like it was probably a strangle. If you did catch that strangle, kudos to you. That's really good. Now, the key is how do you exit the strangle correctly, right? And if you're going to leg out of the call first, then on the retracement back down, then think about the put, not the other way around.
All right, thanks for that, Gary. Super Microcomputer, ticker symbol SMCI.
like
All
that.
right, AJ, markets are still, hitting up at these highs. The VIX continues to drop. It's Friday. We've got peace around the world. We've got the 4th of July holiday coming up next week. Markets back at these highs for the year, for the all time. What are you thinking? How you want to approach the weekend? What advice would you give the community as we close the show out today?
I mean, if you're in some long positions, great. But I want you to be thinking about putting those collars on. I want you to protect yourself against the imminent profit taking. So just think about how you can protect yourself during the summer doldrums against any sort of unexpected profit taking that could take, because the technicals don't lie. There's a consolidation happening in this ascending channel, and usually the result of that is profit taking, a sell off. So that's what I want you to think about.
All right. So with that, once again, let's go ahead and give everyone a quick preview of the quick links page. If you've enjoyed the show, which I know you have, show some love. Hit that like, hit that follow, hit that subscribe button. We're looking for winners every week. We're minimizing our risk. We're taking what the market gives us, and we're not forcing things among many of the other strategies and ideologies that AJ and the team preaches over at the community. So, if you want access to that free indicator, it's on the Quick Links page. Show some love, hit that like, hit that follow, hit that subscribe. Check out the workshop if you want to dig a deeper dive into the premium selling. Check out the coaching if that's something that you're interested in. And yeah, hit that subscribe button on the YouTube channel so that you can get the prompts as we go live and as we post some of our fresh Reels content that we've been enhancing, and I hope that you guys have been enjoying. Otherwise, it's looking like we're going to be having a very happy, more positive weekend. So get outside, enjoy some fresh air, spend some time with the family, and come back next week with a nice, new mindset to find some new opportunities. AJ, thank you again for your time and dedication. We truly do appreciate it. Thank you to all of our lovely viewers for joining us today. We do appreciate you as well. That's all I got for us.
All right, man. Take care.
All right, guys. See you next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button